the cable industry has seen a strong surge in demand in the recent past. And Edelweiss came out with a very interesting note that predicts that the capacity utilization for CMI, by virtue of the acquisition that they've done in BADDI, would move up because of the new order flows that will come in for the company. Let's get in the management. Mr. Amit Jain, he's the CMD of the company, joins us right now to talk about what the company is about and what could the near future be like. Mr. Jain, good having you. Thanks so much for joining in. For people who don't know about your company, can you tell us about the nature of the business that CMI indulges in, Mr. Jain?
Yeah, thank you for calling me.
Pleasure.
And giving me a chance to represent myself. CMI, we are basically cable manufacturers and broadly in the specialty cable segment. We make customized cables for different departments like railway, BHL, EIL, oil refineries, and ISRO, metros. There is a illustrious list of our clients, what we have. Recently, we acquired a plant of General Cable, which was a Fortune 500 company. They were shutting down their operations in Asia Pacific region, and we got an opportunity to acquire their Indian operations. So, with that acquisition, our capacity has now almost quadrupled to what we were having earlier. And going ahead, we are trying to ramp up the capacity in the best possible manner.
Okay. Two questions roll into one, Mr. Jain. Would specialized cables typically carry higher margins? And part two of my question is, am I correct in assuming that the growth for CMI over the next 3 years, or CMI as a story, is essentially a story of capacity ramp up and higher capacity utilization over the next 3 years?
Well, it's not necessarily higher capacity utilization. The thing is, we are in various vertical of cable manufacturing, wherein we cater to telecom, railways, BHEL, instrumentation, then power segment, extra high voltage power segment. We are having different verticals, wherein we have created at our existing plant, we have a capacity which is fungible for all the sectors. Now, what we have is we have acquired a plant which is state-of-art plant built up by General Cable. They are the pioneers in cable manufacturing in the world. So that plant gives us a huge opportunity to increase our capacity, and with the increased capacity and the increased product profile, that leads us to higher capacity utilization and with the better margins than our peers.
Mr. Jain, if you could tell us how much revenues are you looking to do from the BADDI plant, say by FY19, and I believe for FY18 you've already done, or you're likely to do almost 250 crores?
Yes, around in BADDI plant we have somewhat achieved a capacity of 20-25% in FY18. And we expect that this thing will go up in next 2 years. We may reach a level of 60 to 70% by FY20.
Okay, could you translate that for us in terms of revenues? How much can you do? Because from Faridabad, you're doing currently somewhere about 280 to 300 crores.
Yeah, that's right. From Faridabad, we have been doing 320 odd crores. This is the maximum capacity what we have in Faridabad unit. And going ahead, we have a capacity of say 1,000 crore in BADDI.
1,000 crores in BADDI. Okay, I just want to talk about the few concerns which have been. Sorry, Neeraj, you want to go ahead?
No, just that number conversion. So I was just wondering that if the total capacity is worth 1,000 crores, you are currently at about 25% capacity utilization, which would mean sales of about 250 crores if all of them are getting absorbed.
Yes.
If you're saying that you will reach about 60 to 70% capacity utilization, Mr. Jain, in 2 years, I would presume that means you would have sales of about 700 crores from the BADDI unit, and the Faridabad unit would probably continue to do about 300 crores. Are you saying that you could actually reach revenues of close to 1,000 crores by FY20?
That's what we contemplate. This should happen. This is what our plans are.
Okay, 1,000 crores of capacity of revenue is likely with the capacity utilization of 60-70%.
Yeah, right.
What would that do to your operational performance, Mr. Jain. From where you are right now, with the higher capacity utilization, would your EBITDA and EBITDA margins improve, or do you believe your EBITDA margins would consolidate at the levels that they are at right now?
We expect good improvement in our EBITDA margin, but it may not be 4, 5, 10%. But yes, it will be better than the industry average, and it will be a reasonably good EBITDA margin because of the economy of scale what we will have after achieving that turnover. And a lot of our fixed expenses which are now spread for a small turnover, that will be spread out on a larger turnover.
So if you go to about 1,000 crores, and which is almost doubling your revenues, nearly doubling your revenues from the current year, and if your EBITDA margins improve, is it safe to assume that from the 32 odd crores that you will likely clocking in FY18, you could nudge on the bottom line numbers close to 65 crores? Is that a safe assumption?
Yeah, we expect that those numbers.
Okay, fair call. And your return ratios would improve as well. I just have one small, because we are on the topic of numbers, Mr. Jain. The one note that we read mentions that your return on capital or return on assets could actually nudge up to 18-19% in FY20. Is that a distinct possibility? I was just looking at some of your larger peers or companies which are your peers but having slightly higher sales. They are also trading at about 16-17% ROCE, ROA. You think you will better that?
Yeah, definitely. With the expanded turnover and the better capacity utilization, these things are bound to happen.
Interesting.
Okay. Mr. Jain, the key concern for a business like yours, since you're getting orders from railways, is the high cash conversion cycle. Correct me, it's somewhere about 100 to 120 days. And also the other factor which has been impacting the bottom line is the higher finance cost. If you could tell us that will the cash conversion days continue to be the same in FY19, FY20, and B, with regard to the finance cost, which I presume its majority of it got to do with the working capital, if you could break up your short-term and long-term debt for us?
Well, as far as cash conversion is concerned, for the 90-20, since we are on a high growth trajectory, so that those numbers may not be that good. The cash flow would be there, but not that positive as is expected. Because looking, say, what we are talking about a turnover of say, increase of 50% for next 2 years. So that numbers may not be good, may not come that way. And as far as the financial cost is concerned, we have a long-term debt of around 40-45 crore odd rupees. Rest is the working capital, as you have rightly said. And typically in our kind of industry, with the government involved and with the contracts involved with the majorly supplies going to public sector undertakings,
targeting your revenues of 1,000 crore and you majorly your working capital is coming via short-term debt, then that finance cost will continue to be higher even in FY19 and FY20, because that's the one which is actually capping the move with regard to the growth that one is seeing for the bottom line.
Well, that will be there. The working capital requirement will be large as far as we go on. And gradually with the increased cash approvals, going after, say, beyond 1,000, that level will come down significantly.
Okay, just one last question from my side. I think 23% of the promoter holding has been pledged. If you could tell us any timeline when that holding will be released? When that pledge will be released?
23%.
Sorry?
I think the figures are not correct.
Out of the 43% promoter holding, I just checked from the exchange's website.
Okay,
it could be wrong, you can correct me.
Yeah, of the promoter holding, right.
Yes,
right.
Of the promoter holding of 43, 23 seems to be pledged.
Fine. Numbers are okay. Yes, we have to have some short-term borrowings what we have taken. And they will be, I think, by this quarter end, they will be released.
In a quarter, you're suggesting?
Yes.
Okay.
That was just a stopgap arrangement what we had to do.
Okay, Mr. Jain, we wish you all the best. Thank you so much for taking the time out, and all the best with the quarterly results as well. I believe the results will be out in a few days.
Yeah, thank you. Thank you, Neeraj. Thank you, Navneet.
Thank you.